We've got the management of JBM Auto, which reported third quarter numbers with us. Nishant Arya is Executive Director of the company, and he's with us on a phone line. Nishant, thanks very much for your time. Good morning, Prashant here. Could you just take us through the quarter in what you thought were the big highlights qualitatively? And just one point, margins I can see are down about 50 basis points. If you could explain that as well.
Yeah, sure. See, this quarter has been quite a interesting quarter for us because the toolroom division, which gives about 30 to 35% EBITDA margin, has gone up by about 87% on a quarter-on-quarter basis, year-on-year basis, and in a period of 9 months also we have been consistently performing at about 87%, and that's what we intend to continue also through the year, and that's a clear-cut strategy where we'll be going up by about 70 to 80% even in FY19 and even FY20 on a YOY basis. So the idea is that how we're focusing on areas rather than only top line in increasing the bottom line and making the company more strong.
Nishant?
At point, in terms of margins, I really see that the EBITDA of the company is quite consistent at 13%. So, and if you see the bottom line, rather, we've grown further because we have about 5% PAT, and that is even after the steel prices have increased substantially in the last 6 to 9 months, and at the same time the market has faced a certain level of contraction and challenge because of the NBFCs not lending as much in the last 2 quarters.
Okay, that point is taken, Nishant. So is that why your components division, which is basically the bread and butter of your business, your majority of sales, is that why your revenue is down 3.5%, your margins are down around 100 basis points or maybe less than that, but 7.7% versus 8.2%? Can you explain to us what took place there?
Yeah, the basic reason is this only, that the last quarter has not been good for the automotive industry, and the industry has, people have tried to just empty out all their stocks, and the performance of companies has definitely taken a hit, and that's the reason why in this company we have a good combination of high-end products like tooling, components and systems. So in components also we have 2 kinds of components. One is high-level sub-assemblies and systems, which have done well, and secondly the component business. So component business has taken a hit, but definitely the tooling business is doing well, and this year the bus division is also contributing. So consistent performance from Q2 to Q3 as well, and in Q4 also I see that we will be performing well in the bus business, since we already have a clear pipeline of the industry outlook as well as orders in place. So the whole of FY19 we would be doing well for the bus business, and the next year with the electric buses as well as with the new public transport initiatives which are being taken, there is a lot of traction for our products which we are doing, and since we have a joint venture with one of the Europe's largest electric vehicle manufacturers, giving the ecosystem perspective, so JBM Auto is positioned very differently compared to our competition.
Nishant, could you give us the component business? Could you tell us what is the full year numbers going to look like? And you said, I mean, and FY20 guidance would also be helpful. You began by talking about how tooling business, the outlook remains extremely strong, right? You said yes, 80% plus growth in the third quarter. You expect the similar kind of picture to continue in fourth quarter and FY20 as well. But can that make up for the slack in the main business, the core business? And also, are margins in tooling business far higher than the core business?
Yeah, so as you see, the margins in the tooling business range between 30 to 35%, vis-a-vis the component business being around 10%. And the other thing is that the component business is not having any impact in the upcoming quarters, because this quarter, as I shared, NBFCs were not lending as much, so the car sales were hit. But in the coming quarter, which is the Q4 of FY19, we will be seeing good performance as the commercial vehicle industry is doing well. Even the passenger car sales have picked up in the month of February. So February and March have been good months for passenger vehicles also. And for JBM Auto as a company in component business, passenger vehicle and commercial vehicles are the prime focus area.
Okay, Nishant, just before we let you go, as of your last guidance and interaction, you had mentioned that for FY19, your guidance in terms of revenue is around 2,500 odd crores. For 9 months, you've done 1,300 odd crores. So obviously, there would be probably some challenges to meet that. So would there be a scale down in your guidance, and what might the fresh revenue, projection be?
No, so I had shared 2,500 crores. So currently, JBM Auto is going through a merger. So that merger would be completed in the month of March, most probably. So we are just awaiting the final approval from NCLT,
Okay.
which should come any day. And we would be impacted by about 6-7%. So we should be closing at about 2,300 crores
Okay.
for FY19. So we wouldn't be too far from our target. So that would mean about 37.8% top line growth on a YOY basis post the merger. And at the same time, we would also be seeing that the component division would be doing about 2,000 odd crores out of the 2,300 crores, which
Okay.
we want to do as a company. So the growth is going to be significant, but definitely this year we are classifying as a year of transformation and technology integration for all our different divisions, and
Okay.
that will lay the right foundation for FY20 as well.
All right, Nishant, we're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's the view coming in from JBM Auto. Just want to point out Jubilant Life Sciences. That stock is down around 3% at this point in time. There's no specific news doing the rounds with regards to Jubilant Life Sciences. It's come out with its numbers. There's no sort of buzz. And I just want to point out that Jubilant Industries, which is, again, a part of the same promoter group, is absolutely flat. And maybe we can just pull up Jubilant Foodworks to see what that one is doing as well, and whether or not this profit booking is only probably restricted to Jubilant Industries. Nope, it's also for Jubilant Foodworks, which is down around 2% at this point in time.